What is happening, ladies and gentlemen? This is the Flow Show. I'm Sean McLaughlin. That's Steve Straza. How's everybody doing, Straza? How was your weekend?
My weekend was great. I went to Miami for a day, but it was nice. Almost went to the Miami game. Didn't, but almost.
Oh, well, that would have been a good one to avoid, I guess. Sounds like. I believe it or not, I did not watch any NFL football this weekend. I had a very busy day yesterday, and I kind of decided that I will watch my Bills play if I heard that they won. I've got no time to watch a losing effort. They lost, so I didn't watch.
Who did they play?
They played the Patriots.
That's right. I saw that. I was in the car at the time.
Yeah, busy day. It was a busy day yesterday of preparing for Halloween, going pumpkin picking. I went to a concert, just had a lot going on. Had improv rehearsal, just a lot of stuff going on.
Yeah, man. And now it's Monday.
Anyway,
So you got a lot
anyway, I saw that your Giants won, so congrats.
ugly win, but a win nonetheless, right?
Yeah, in the NFL, all that matters is the W. It doesn't matter how you do it. Anyway, let's talk stocks. So I mentioned you right before we went live. I said, man, at the open in the first 10 minutes of trading this morning, it looked like we were about to really fall off a cliff. Looked like stocks were going to follow through on Friday's ugly action. I was bracing for some ugliness, and then lo and behold, I don't know what happened, but about an hour into the trading day, it looks like the market had a nice little stick save, and you can see on my VIX chart here on my screen, VIX has not, I don't want to say plummeted, but definitely been decidedly lower all day. Cooler heads seem to be prevailing. What do you make of this, Straza?
Listen, the market has been on rollover alert really since last week, right? And you're right. I think there was a risk of a collapse for the broader market here. In other words, where the leaders would finally catch lower to the laggards, and that would put some serious pressure on the major averages, at least the ones that we continue to point to and say they're holding up well, like the NASDAQ and the S&P. But now when I look at some of these candles, even the speculative stuff, like look at this candle in ARK here today. Close to its lowest level since January, but really digging in. I think stocks absolutely have to dig in right here. If you look at the index level, the S&P, we just keep talking about 430, 430, 430. We got to get back there. So another big week.
Yeah, it's a cliche to say it, right? Every week's a big week for one reason or another. But yeah, man, this morning, like in the first half hour of the trading day, I had a whole bunch of alerts just popping off on my screen, alerting me that positions that I have on, they were, tripping their lower risk management levels where I'd like to get out. Now, I don't get out of my trades, my swing trades intraday. I wait for a closing price. Right now, that's looking like a good decision because they've all bounced back. But man, it was just bing, 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 alerts going off left and right. I'm like, oh, that's never a good sound.
The last couple trades that I entered, I've been stopped out almost immediately over the past week.
Yeah. I don't know if you saw a tweet out. I put a tweet out to that very effect on Friday. I said every trade that I've put on that is slightly bullish has just gotten smacked in the face quickly.
Away too. I don't know about you with the Bank of America trade, but I was stopped out like a day or two later.
My Bank of America trade was one of those that signaled me this morning. I'm still in it because, like I said, I'm waiting for the close, but that's on high alert right now.
So from a technical standpoint, it's banks and it's small caps, right? We talked about it on the show a little bit this morning. If you want just like a nice little level to use as a line in the sand for should I be putting on, new long trades, or maybe should I be patient and, waiting this whole corrective action out? I think IWM at its pivot lows is a really good level for that. So if you throw up, yeah. So we have the pivot lows on a year-to-date basis, which we took out last week, and now zoom out a little bit. And we have some, I guess they're not pivot lows, but lows from last year that come into play pretty much right here. And we've seen small caps. And the reason we love the small cap index so much is because it looks like the value line. It shows it's a really great representation of what most stocks are doing, the majority of stocks are doing. So we've seen the Russell find support at this level time and time and time again. Boy, they got to come out and defend this level again, because this is critical here, especially with how vulnerable the rest of the market looks. Credit spreads hitting multi-month highs. A A lot of stocks breaking the multi-month lows. The S&P kind of slipping after appearing to make a save, earlier this month. So big level. We say the more times the level is tested, the more likely it is to break. And this one's on its last leg. I don't think it could take another test.
Yeah, I'm not in the camp that I need IWM to be making all-time highs for me to believe that the bull market is happening. However, if this thing's breaking lower,
yeah,
you
can't have.
We're not having a bull market anytime soon.
No, it's gonna. I won't be trying to make money on the long side if this is below this shelf of support, right? Because it gets real dicey. It's been tough to make money on the long side just due to how thin of a bull market it's been all year. Russell below this shelf of support, that gets a lot harder, right? So that's a level.
Yeah, bullish bets, like we said, bullish bets have just been met with stop after stop after stop. Nothing's working. It's frustrating, especially if you're a bull. And it's frustrating for a trader like me who generally, I've learned the hard way. I've been trading for 25 years. Unless I'm day trading, I have a hard time making money on the short side. It's too hard. The reversals are too quick, too fast, too whippy. It's not my cup of tea anymore. And so I'm just looking to sell premium in shifty markets like this, which, by the way, selling premium has been working. In fact, we got out of a delta neutral strangle in the XLK, which is a technology sector ETF. That's a trade we've had on for about 3 weeks or so. Hit our profit target today during the rally this morning. So that's nice. Those trades, they're not all working, Straz. I mean, I have been stopped out. I mean, IWM was one of them. We had a short strangle on that one, I believe, and that one got stopped out last week. So they haven't all been working, but I feel like that's our best opportunity for those types of trades in this market for options traders. That's where our best odds are right now.
Yeah, so let's try and do the opposite, which is what we do on this show every week. So it's been easier to bet on sideways as a direction. The nature of our flow show list is these are directional bets. Ideally, we like to believe at least that options market participants are making. We're looking to get either long or short. We only have one option from the short side this week. I got the list up here. It's Nova. Yes, Sunnova Energy. This is one of those solar names. I just think this is a space you want to continue to stay away from. It is a bit of a logical level. I didn't bring along the chart. Throw it up on your chart and put on like a weekly.
Yeah, I got a weekly chart on right now. Stock's trading just below $9 a share. So it was the 5 strike puts that we were seeing action.
Yeah.
That's an aggressively bearish bet. That's what is that? That's 40% drop from here.
Going out to March of 2024 is not even that long. They're betting that this thing is a zero.
Yeah.
Right. If you go back to 2019, 2020, you do have, some key bottoms at this level. They're betting that those break and the bottom absolutely falls out of this thing. And they would get paid nicely. Find some puts 5 months out.
Yeah, see that open interest now here on my screen. There's 10,000 open interest or 10,000 contracts of open interest there. That is an aggressive bet, and I'm with you. I don't think that's somebody that's hedging a long position. Well, actually, maybe they are hedging a long position. Maybe, I don't know. I find it hard to, and maybe this just speaks to my own ignorance, but I just find it hard to bet on a stock going to zero by buying puts to do it. I don't feel like that's the best vehicle. I think you just short the stock and maybe use call options to protect your short position, long call options. But buying the puts, I feel like you're better off just shorting the stock. But that's just me. I don't really have any special edge in that type of trade.
It's hard enough to pick a stock that's literally going to go away and go to zero. Gets a lot harder than trying to get the time frame right? Like these things can take forever. So you can be right on a short thesis, but what if it takes 3 years? You only got 5 months in the case of these. So
a company could work all kinds of shenanigans. They could try to do a little reverse split, which always sucks in the suckers. Reverse split's always a bad sign, but short term sometimes it gives people a glimmer of hope. And I heard JC on the morning show this morning mention how don't 70% of all stocks go to zero? Sure, maybe, but betting on this one happening going to zero by March, I don't know.
So I found a good one though. Another thing JC's been saying a lot is healthcare. He likes it a lot. We do have some nice structural chart patterns in healthcare. One of them popped up on our list today. I think you've been involved. Boston Scientific. Didn't you have a trade on that last year?
I've not had one on in a while. I have traded it from time to time, but not in a while.
So this is what I like about it. When you zoom way out, this is a tech base, right? A semiconductor base. If you go all the way back to dot-com bubble highs.
Ooh, you're talking way zoom out. Okay, hold on.
I got it up on mine. Don't worry.
Okay, all right, sorry.
So we'll go all the way back. Dot-com bubble highs were about 46. We came up, we tested them before COVID, failed, rolled over, sold off hard, tested them again in, I think, 2021. Finally took them out earlier this year. And when you zoom in, I like this chart art. When you zoom in, I'm just showing the short-term top here because we got the structural breakout. And now we have what looks to be a top after, a little bit of follow through, now a short-term top. If this fails, which I'm showing it what that situation might look like in the zoomed in pane right here. If this failed, $50 could be a great level to have entered this stock looking back. If it goes on to hit our target above 70, I do like this entry. I think you keep it really tight here at these pivot lows around 50. And it's one of those situations where this is a great chart. It's a chart we always want to be buying, but these structural based breakouts, they often take too much time, right, to materialize into the move that we're looking for. I kind of like this having a new leg higher sparked by a little failed move here.
Well, if we're going to use this chart as our reason to get in trade, which I don't hate, great. We as an options trader, we got to think long term, right? Because like you said, this thing's not going to resolve next week or next month.
Leaps. These are the kinds of patterns we buy leaps in, Sean.
Yeah, that's what I'm thinking. The only problem with buying leaps is Straza, look at my chart here. Look at the bottom of this chart. Look at that implied volatility. Up near the highest prices it's been all year, probably because it's got earnings coming up any day now.
Yeah, let's check.
Let me pull up my little earnings thing here. Yeah, the 26th. So this week. So that's fine. This is a long-term bet, right? Maybe this is a trade strategy that we put on the shelf until next week. Let earnings get out of the way. And then we start looking into these January 26 leaps. Look at that, Straza, 2 years out. And, maybe we start looking at, look at the 60 strike calls. $6? We can get them for $5.75. That feels, even with elevated volatility right now, that feels kind of cheap to me.
We should get at least a double based on our price target. If our price target's with those contracts, a double or more, depending on how long it takes, right?
Yeah, look, barring a massive gap higher in Boston Scientific following earnings this week, which I don't think is in the cards, not in this market environment, we could probably get these even cheaper next week. Yep. At this price, very tempting. I like it.
And what was it? Chevron, I think we did in a similar way, right? With leaps, and it was a monster-based breakout pattern like this. And I think it's one of the better options trades of the past year or two.
Yeah, we're still in it, believe it or not. We've been in that trade for 18 months now, 19 months. We got in February of 2022.
So that's kind of what you're hoping for, is like a home run with leaps like this, right? You get the monster-based breakout. You have a huge leg higher, and you just kind of don't even need to monitor it. You let the thing run.
Yeah, look, I like this trade. Let's keep an eye on this one. Maybe we revisit this one again on this show next week, and talk about putting a trade on. And maybe we get a little crafty with it. I got some ideas. We'll save them for next week. But I like this one. In fact, I wrote it down here in my notepad. I'm gonna keep tabs on it. I like this one.
And then so let's move on. I brought one more. We'll give an honorable mention here to Shopify. The base broke out early 2023. This is one of the, first bases in these speculative growth stocks that were really banged up. to resolve higher. But since pretty much all year, this thing's been dead, right? Straight sideways, pretty big top. I could draw a horizontal line pretty much right here at the lows from the last few weeks, which just keep getting hit over and over and over again. And if you look at the stock today, maybe Sean, throw it up with your live chart. Monster candle after shaking lower. This is something I would categorize as like a super short term, super tactical, like only if we're above 50, 75, those lows since just late September. But this look higher and run. And if you're in some short dated calls, pay pretty well. If that's the bet you want to make, right? I think that's a hard bet to make here based on the action of the broader market that we keep alluding to. But in a nicer, kinder market environment, I wouldn't hate a trade like this at all. I think you do have a level there.
All right. So for the junkies, I like this trade too. I like it very short term. We do have earnings next week on November 2nd, but I like it short term, Straz. And in fact, I like it looking at these options that expire end of this week. So the October 27 expiration. I mean, I'm putting on my day trader hat here. You buy the 52 calls, basically just out of the money, and you put the trade on with a stop at today's low.
Yep.
I like this for a move back up to 55 before the end of the week.
And you know what you're betting on here? You're betting on this candle was the short-term tradable low. You got the nice little shake whipsaw move, right? That's going to trap people and bring on incremental buyers. And then you're looking for like 2 days of follow-through, maybe 3 days of follow-through, and you're out. Right?
Yeah. Yeah, look, you could buy them right now for $1, let's say $1.12 if you pay the offer. If if Shopify gets to 55, these calls are going to be worth at least $3, probably more. There'll still be a little premium left in them. So you're getting a triple on your money from here with
John.
I'm sorry?
These are 52s?
There are the 52s, yeah.
Got it.
The 52s, you could pay they're ticking up now, $1.14. But if Shopify gets to 55, which I think is not a stretch at all on a 3-day move, these calls will be worth triple what you paid right now. And what's the worst case here? If the thing reverses and breaks today's low, you're probably hitting the bid and getting out for, I don't know, 50 cents, maybe 40 cents. That's a good risk reward. I like that.
I don't hate that one bit. I mean, what most you could lose is $100.
Yeah. All right. So we don't talk about day trades here or very short-term swing trades very often, but if that's your bag, and let's just drop this caveat, Straza.
Yep.
And we talked about it at the top of the show. You and I, and many people I'm sure, have been frustrated taking any trades on the long side. We've been smacked in the face repeatedly, very quickly, on any bullish bets we've made. So with that backdrop, you have to be aware that this is while the risk reward is favorable, right? We can make 3x our money if we get it right, or we might lose half of our money if we get it wrong. I like that risk reward, but in this tape, I feel like it's a higher probability that this ends up being a loser just because that's what's been happening.
These, unfortunately, are lower probability trades at this point, right? You have this is a top. It's a bearish chart pattern. So odds are it resolves lower. We'll have to wait and see. But if it doesn't, I think you're right. 1 or 2 days of some big follow through could easily put you 55, 56. And in that case, will have been a great trade. But that's what happens with these low probability trades. They tend to be higher risk, higher reward.
Right. And if you want to be even more aggressive, which I don't hate this idea, is you buy them here, you pay this price, and the price target is 55. At 55, you take your profit. But in the meantime, if at the end of the day, whether today, tomorrow, Thursday, if at the end of the day you're in the red on these calls, just cut them. You're running against the clock. Forget about it. Just get out, cut your loss. Maybe that's the move.
And I think that's fine for a pattern like this. That's what I did with Bank of America last week. I got in one day. I really liked it. The candle looked good when I got in. It reversed by the end of the day. We opened up the next day. It was getting dunked on again. I said, this isn't what this chart was supposed to look like when I bought it. Right. And that's it. That's all you need to know to cut your losers sometimes. So
All right. So for today's Flow Show, we got a little something for everybody. We got something for the short-term junkies, the Wall Street Bets crowd. If you want to get in on a quick hit trade that has a good, favorable reward to risk scenario, this Shopify, buying the weekly options that expire the end of this week, buying the 52 strike, getting out of 55 is a great play for that. For those of you who are more long-term minded, we've got this Boston Scientific trade. We're going to be patient on that one. We'll revisit that one next week. But that was a good one to keep on our radar for more long-term players. All right. Hey, look at that, Straza. We came up with a couple ideas this week. I like it.
And maybe this is some sort of tradable loan. We're coming on here next week saying, oh boy, maybe we should have been more aggressive. But you just don't know yet. Watch the Qs, watch the S&P. They're testing those lows from like 2 weeks ago. And if that level holds, maybe we do get a nice little automatic reaction rally into the end of the week. Trade like Shopify would crush it in that environment.
Yeah, let's hope for it. All right, folks, this has been the Flow Show. He's Steve Straza. I'm Sean McLaughlin. Thanks for tuning in. We'll be back next week. Until then, we'll see you on the morning show tomorrow. Take care, everybody.
Bye, everybody.